Meantime, European markets set to close in a moment with red arrows pretty much across the board. The DAX, the worst performer right now, off more than 1%. As you may know, Bank of England did drive today's market action overseas, along with another move by the Bank of Japan as they implement this emergency bond buying. Steve Liesman joins us to now talk about, I guess, maybe start with BOE and sort of their view of what inflation and growth may do next year, Steve.
Well, they brought it down a bit, but it's still high. And the story here is that they raised a quarter, which was less than the 50 that some had been concerned about in the market. The vote was 8-1 to raise rates, but 6-3 to raise it by a quarter. Why? Because two folks on the BOE board there wanted to raise by 50. One didn't want to raise at all. So the question is, where is the BOE? There's a lot of discussion that they have more work to do in September. I want to show you, Carl, real quickly, the three main policy rates out there. You can see the U.S. is, hey, we're number one. I don't know if we want to be number one in that, but we have the highest central bank policy rate right now. Maybe at or near the end game there. BOE also close, but signaling it has more work to do and saying it's going to remain sufficiently restrictive. ECB also close to the end game. But you can see how much more work there is to do in England, especially when you look at the inflation rates, guys. Inflation topping 7% in England, down towards 5.5%. And hey, we're number 3, I guess, is the place we want to be there on the overall year-over-year inflation rate at 3.1%, at least when it comes to the headline. So less work to do here, more to do in England. And Carl, you know that the UK is a special case because it's having that sort of after effects of Brexit, which are not positive for either the economy or inflation.
And what about Japan? What are you seeing in terms of the Bank of Japan intervention?
Well, you'll notice, Julia, I completely left Japan off of that because Japan is always its own special case. And what's happening with Japan is Japan's trying to loosen up yield curve control, which is essentially to tighten policy, but do so in a halting and somewhat curious way. It raised the limit, I guess, on its yield curve control, but then came back in and bought bonds earlier this week. So it's not entirely clear the drift of policy, or at least the strength of the drift of policy. They are going tighter, but doing so in a very halting way. Japan always and ever its own special case that you can't really talk about in the same conversation as you talk about the other three central banks.